Good morning, traders. Welcome to Monday's Technical Talk with me, Aaron Hill, one of the market analysts here at FP Market. Time is now 8 a.m. GMT and 9 a.m. London time. So let's check out where we are in the technical picture. I have a handful of charts to go over of interest this morning, largely focusing on the majors, the major currency pairs. So kicking things off with the euro dollar. As you can see on the bigger picture, we are still hovering above prime support on the weekly time frame at 1473, 1583. This is a key area, guys. We could have some long-term stops potentially below here, and that's at the, let me just get the crosshairs on. That's at the 1612 low, and that's the 21st of September. As you can also see, we also have some Fibonacci studies in play here. We have a 100% Fib projection at 1613 and also a 1.27% BC Fib extension. With that, we also have the daily time. This is the daily time frame here, guys. This is we're also currently trading at Quasimodo support at 1689. Excuse me. As you can see, price did attempt to come off this level on Thursday last week, but given the room seen for the weekly time frame to move lower and test this prime support, it's unlikely this Quasimodo support is going to produce anything to write home about. As you can see on the shorter term charts, this is the H4 and this is the H1. We are currently drilling into a decision point at 1690, 1705, and recently crossed below the this is the 117 figure. Now, guys, do be aware, below this 117 figure, we do have demand on the H1 time frame at 1675, 1686 to be aware of. So this is a bearish picture I'm seeing on the euro dollar right now. Cracking below this demand here will likely draw us to this Quasimodo support on the H4 time frame at 1666. Clicking things over to the Aussie dollar, we are still testing prime support on the weekly time frame at 69.68, 70 to 42. This is a key area, guys, and could, if buyers gain some traction here, we could eventually test prime support, prime resistance, excuse me, at 78.49, 75.99. Down on the daily time frame, we don't really have much to go on right now in terms of technical structure because we're still caught between Fibonacci support. I think that comes in around the 70.57-ish area to the 71.26 zone, and prime resistance at 75.06 and 74.74. So what this tells me is we could potentially drill further into this weekly prime support, given the room to move lower on the daily time frame, at least until touching gloves with this Fibonacci support on the daily time frame. Now, as we move over to the shorter term charts, we can see that we had a beautiful picture perfect stop run of the 73 handle at the tail end of the week last week, and this was a whipsaw above 73 into a Fibonacci cluster, which is a congregation of Fibonacci levels in one specific at one specific price point or one specific a tight area. And this coming around the 73.20 area to the 73, I think it was 73.15 to be precise. And as you can see, this is largely consists of Fibonacci retracement values and also I think it was a 1.272% Fibonacci projection. And as you can see, we did react nicely off of this area and continue lower. Right now, I don't really see much to go on unless we test this support area here at 72.21 on the H1 time frame. Below this, we have a Quasimodo support at 72.05. We could see a whipsaw below this support here into this Quasimodo support at 72.05, which I believe is situated within the H4 decision point at 7200, 72.18. So do be on the lookout for that sometime in early week trade, I believe, maybe midweek trading. This could occur. Okay, kicking things over to the dollar yen, we had a really beautiful move off weekly demand at 108.40, 109.41. This has been an area of interest since mid-July of this year, with not much really going on. But as I said, we did get some strong moves last week. Now, what this has done on the daily picture, this is the daily time frame here, it has drilled into prime resistance at 110.86, 110.27. What's interesting is the Quasimodo resistance at 111.11, hovering just above this area. There's going to be stops. There's going to be sellers, range sellers interested in shorting this area, and they are now in trouble at this point here, with stops likely below his above this area. But what this will also do is attract breakout buyers once we get a close above this area, or if we get a close above this area. And you may have willing sellers at this point here. Also of interest on the relative strength index, we had a consolidation break last week as well, which could lead to an overbought reading. In conjunction with the Quasimodo resistance, maybe, this is something we'll have to see later in the week. Now, what's interesting is this is the H4 time frame here, and this is the H1 time frame. We did have a mild reaction off the H1 channel resistance, and that led to a near test of the H1 channel support. I was looking at the intersection between this support here, which is actually at 110.48. That's actually a Quasimodo resistance turned support. I was looking for price to test this area here, but it didn't. It just missed it and is bouncing higher. Now, the interest on this time, excuse me, on this time frame right now is the 111 figure. Why am I interested in this is simply because we have a Fibonacci resistance on the H4 time frame between, let me just remove that, between 111.33 and 111.20. Now, this is not the only thing that's really interesting me. Above 111 on the H1, let's not forget we have also the daily Quasimodo resistance at 111.11. Now, combine the Quasimodo resistance, the daily Quasimodo resistance at this level here, and the H4 Fibonacci structure, resistance structure. We have some serious, relatively serious resistance above the 111 figure. So there's going to be, highly likely, there's going to be some breakout buyers above here, also stops from those looking to fade the round number. In addition to this, we also have supply at 110.99, 110.79, which has been in place since the beginning of July, and this supply, and there will also be stops above this area as well. So what I'm trying to say is, once we break above here, buy stops will likely fuel a move into, as you can see, we break above here, fuel a move into this H4 resistance combined with this daily Quasimodo resistance. So we may see a bearish reaction form off of this area as sellers begin shorting into that buy stop momentum. Kicking over to the pound dollar. Now, on the bigger picture, the weekly time frame, I have noted in my daily market analysis, or the weekly market analysis, should I say, we have a double top pattern forming on the weekly time frame. And I believe that comes in around, let me just get the crosshairs on. I believe that comes in around the 42.41 high. We did break the neckline. But simultaneously, we also tested this supply turn demand at 36.29, 34.56. Now, given the lackluster vibe off of this area, I do believe we are heading lower on the pound, technically speaking, just on this chart alone. And that could fulfill the double top pattern and potentially bring us down to around this area here, the 30, the 130 figure. What this also tells us on the daily time frame is Quasimodo support at 36.09 is potentially weak. Now, going on, in conjunction with the weekly time frames, bearish projection right now, in addition to the relatively lackluster vibe off of this Quasimodo support throughout August, which failed to find acceptance above the 200-day simple moving average, it tells me that we are likely heading below this Quasimodo support on the daily time frame. That's as I said, at 36.09. Now, with that being said, we are right now seeing a reaction off of this H4 resistance at 36.93, and also we have resistance on the H1. I believe that comes in at 36.89, and also the round number 136. So I'd be looking at these areas here, this H4 resistance and the 137-ish range on the H1 for potential selling opportunities. Now, I did want to just kick over to the VIX, the S&P 500. I highlighted this on, I believe, our Twitter feed. As you can see, price is bouncing off of the, this is the S&P 500 of the daily time frame, and this is the VIX. So look, the VIX acts as a benchmark for measuring expectations about future stock market volatility. However, because as you can see, the S&P 500 is long biased by nature. When there are declines, investors tend to buy protection. This is more of an overreaction. And when I say buy protection, I'm talking about put options. So once you see this occur, you generally see a dip in the S&P 500, along with a dip in the S&P 500, which is joined with a rally in the VIX. As you can see, we have a trend line resistance on the VIX right now, and that did react. I think it was last week. Yes, last week, and that also converged with the 100-day SMA on the VIX, and we are seeing some buying off of that area on the S&P 500. Right now, so that's something to keep an eye on going forward. Just finally, we have the dollar CAD chart forming a potential AB equals CD pattern, and this is on the H1 chart. Now, we do note that price is near the 126 barrier. We also have a Quasimodo support at 25.94, and also prime support at 25.65, 25.85. Now, the AB equals CD converges with this prime support. Now, what I'm looking for as a potential scenario is price to come down here, maybe bounce off of this round number, and then slam into all of this liquidity, likely hovering below this to test either the Quasimodo support at this area here or the prime support at this junction here, and whipsaw back above the round number. Time will tell whether that comes to fruition, but it's really nice to see the AB equals CD convergence at this point, along with the obviously the 100% fib projection at 25.65, and the 1.618% BC fib extension at 25.72. That's it from me today, traders. I hope we all have a productive session ahead. Thanks for your time, and I'll catch you on Wednesday.